Hi, folks. It's Jim Bunker and Jonathan Sherman again here with Street Smart Options. And today we're going to talk about a stock that, Jonathan actually identified this as an IPO that came out back in March of this year. And some of the questions that we get from time to time is how do you make money on IPOs? Now, obviously, we're a stock options company, and there has to be an options chain for you to trade options, but there's other ways to make money, and that we don't solely focus on just on options trades. That is the bulk of what we do, but there are other ways to make money. Now, Jonathan, I know you were saying that timing was really important with this. Can you take us through it?
Yeah, it's important to get these IPOs at the right time for sure. Uh, what we're looking for is an IPO that on its trading, on its initial public offering day, trades higher than where it was expected to trade, and then holds that trade level. So we look typically for stocks that have traded for a few days and have held the price level. So this is ZS. We talked about it on March 21st. Its name is Zscaler, and they're a cloud security company. They offer secure platform for airlines and larger corporations to access apps online without using an appliance. So the place where I find these kind of ideas, I use a website called iposcoop.com, and they have on there a page that shows the last 100 IPOs, and then you can sort them. And so in this case, you can sort it by date of offer date, or you can sort it by return. And we're looking for a company that has had a recent IPO that has had a return of at least 10% in its price, and maybe 20%, right? We're looking for something that versus its offer price is up about 20% or more. And hasn't yet moved, right? So a lot of times these companies they'll have like the offer day, and then if you look at the chart like ZS, for example. Well, we're skipping ahead there. Like this was the day we talked about it. They'll have this like big offer day. It's up quite a bit. It's a popular IPO, and then they'll have like maybe a rest day very often, or a few rest days, and you can get in during the little respite that it has in the stock price move. The IPO, it's interesting that IPOs move like they do in the first few weeks to months. Is the companies that have to buy these things are like ETFs and mutual funds that are forced to buy IPOs, and what do they buy? Well, they buy the ones that are most popular, right? They buy the ones that are performing well, and there's going to be just kind of this general consensus about which IPOs are hot and which ones aren't, and they tend to move over the next couple of weeks. So a hot IPO that opens hot will tend to move in the next few weeks. Now this is just a trade, right? So a lot of times these stocks, well, I shouldn't say a lot, but 50% of these stocks will pop and then they'll fall back in. So some will keep on moving, but we're looking at it for a trade. We're looking at what they can pop like big. They can pop like 50% pretty quick. So this is Scalar. It's a hot IPO, opened big on its trading day. It fell back, and we actually were a little early on this because we suggested looking at this when it was about 30 and a half. And if we skip forward to the chart on this stock, you can see 30 and a half was a little early because it traded down to 25, right? But you don't really give up on these things. You stop out. This thing isn't working. It should have worked right away. It didn't work, so you get out of this thing. But you don't lose sight of the fact that it can still work. You continue watching the stock for signs that it's going to work. And this stock gave it a really good sign because it had this maybe 2 month time period where it did nothing, was very quiet. Volume dried up, and then it broke to new lows, which looked kind of bad, right? But actually what it did is it just shook this level, right? They came in and they shook I don't know if the buyer does this or who does it, but it's a little bit of manipulation. They shake the level, they shake the lowest low of the move, and this is typical in a lot of stocks, not just IPOs. And then a buyer came in and took it right back up, right? And that was your sign that, okay, they shook it, they got all the weak holders out, and then they took it right back up to the same level the next week on at that time it wasn't huge volume, it was just this little volume down here, but the important point was that it took it back above the price level where it broke. So it broke the support level in this thing around 26 and a half, and then it came right back up, and that was your sign, hey, it's time to get into the stock right here. So and sure enough, this stock, it popped, and it was only one or like a 2 week pop in this stock. Now the overall market was weakening at this time, and so it didn't go anywhere beyond this. So you had to just take your money and run. But it was a strong pop, 28 to hit a high of 44 if you could time it just right. But nobody's going to time the tippy top of these things. But you could have gotten out even on this little drop on the third week after the pop. So it popped, it's kind of stalled with the overall market, started to fall back in, broke the previous week of this high week here, broke the previous low of the high week, and that was a signal to get out. So you could have gotten in around 28-ish and gotten out at 38-ish. And so that was a 10-point move on a $28 stock. So, not bad. Now, it would have been a stock trade, not a option trade at this point, but the stock did, this kind of thing, you see this a lot with these hot IPOs. So let's take a look a little bit at the company because it is an interesting company. They operate a cloud security platform. It's a software as a service, and this is Yahoo Finance. And they talk about, they sell their product to airlines, transportation, conglomerate companies, consumer good and retail, financial service. So they're, a broad, diversified kind of entity. That they're doing quite well revenue-wise. So if you skip ahead to their financials, you can see, let's look at the income statement. And in 2017, they did 125 million, and obviously their growth rate's been phenomenal, right? They did 53 million in 2015, and then 125 million fiscal year end 2017. So the revenues for the company have gone up over 100%, 150% in 2 years' time. But they're not operating at a profit, and a lot of these software companies out of the gate do not operate at a profit. You like to see though some cash flow, right? But this is an IPO, short-term trade, so we're not too concerned about the financials. We're more concerned about the technicals and the story and how sexy it is and whether there's institutions involved in this thing. And so, the check mark on all those boxes. So it had a loss though in its recent fiscal year, and it's still losing money in the latest quarter, April. It had an operating loss of $6 million. And if you look at the analysts, what they say about it, they're expecting losses to continue through the fiscal year 2019. So they're not turning the corner real soon. But again, we're more interested in the other stuff that drives these kind of IPO stocks. Now, if you even look at the cash flow of this thing, it's cash flow negative, right? So it's burning money. Changes total cash flow from operating activities. Well, I stand mistaken. This is in the latest quarter. They actually reported a positive cash flow ended in April 2018. So maybe they're turning the corner cash flow wise. Annual cash flow in the latest fiscal year was negative for sure. And then we can look a little bit at the actual website for the company. You can see types of products they have. It's all about internet security, secure web gateway, cloud firewall, cloud sandbox. So it's different ways that you can secure your development platform in the sandbox. You can secure your airline in the web gateway, and so they offer a convenient solution for high security for websites and data in companies. So anyway. The important thing is you can find these things on IPO Scoop. You look for the returns, and then you go to your charting service. I use Street Smart Options. I use StockCharts.com, and in Stock Charts, you can look at the different charts, and you can pick and choose your winners. And that's the scoop on Zscaler.
Awesome, Jonathan. So, folks, as you can tell, it's not always about what's happening today, but it's also about what we're watching, what we've been watching, and if you keep doing the same kind of things that you're always doing, you're not going to get any changes. So, we're very progressive in the fact that we watch several different types of stocks and different companies out there. And Jonathan's always keeping us on the cutting edge. So if you're liking what you see, make sure you do subscribe on YouTube and you make sure that you crush that like button for us. We appreciate that. If you haven't joined our free group over on Facebook, do that. Just look for us under Facebook groups, Street Smart Options. And by all means, if you're interested in actually putting some of this to good use and seeing the training that Jonathan has put together and that we put together at our company, you can always find us at our website, streetsmartoptions.com. We thank you for your patronage and for coming by tonight, and look for us for the next exciting video.